Welcome to Analysis in Chains. I'm Nathan Williams. Neil, spring is here.
Oh yeah, I have a nice spring in my step. This is the day we've been waiting for, Nathan, for a very, very long time. It's been good. I don't know if you've seen the crypto prices in the last week.
They look a little more positive than they have been over the crypto winter.
Yeah, big time, big time. I would say that crypto winter is not completely over. We're not in a bull market, but the thing is that just this spike has everyone happy again, has everyone excited about crypto, and maybe it's not going to zero after all. So yeah, this has been a great turnaround for everyone, and yeah, I'm very optimistic for the rest of the year. Even if crypto were to drop back down to like 3,000, I'm like, yeah, no, it's turning around, and you can definitely see that sense of optimism and hope returning back. And yeah, it's cool. It's cool to be part of the industry.
Yeah, it is. Like, I mean, I always look at the ether prices, and I think back to normal for me it would be somewhere around the $400 to $500 range. I mean, we're at what 160, 170 right now, which is a lot better than it has been. It is a bit of a spike. Once it gets back up to 400 or 500, I'll be like, okay, we're out of it. We're out of it. Now we're going to start seeing some real investment come back, some excitement happen, and some interesting projects come forward.
Big time, big time. Yeah, I think for a lot of investors, and I think this is what the price spike really summed up, a lot of people have money on the sidelines waiting for that entry point. And I think the spike in the last week was that sort of green flag. Okay, it's good to come back. You know, you can come out of hiding now. And I think we're going to see a lot of interesting projects in the next few months, but also we're going to have, it's going to be interesting just to see how the price rallies and how people react to that.
Now, speaking of interesting projects, I got to speak to someone really interesting over the weekend, Neil.
Who's that?
It was Charles Hoskinson. Charles is the co-founder of Ethereum, who went on to found a company called IOHK, and probably one of the premier people in the crypto and blockchain space.
Yeah, I would totally agree with you. He is a bit of a legend, and he's a part of Cardano as well. He helped set that up, and this is definitely one of the most exciting projects in my view. I've been talking about Cardano on the podcast now for a long time, and definitely it's my little darling. So I can't wait to hear this interview.
Yeah, it was also interesting because pretty much every project he does has been really molded by, I guess, sort of the ideals of crypto. It's just interesting to see someone that's sort of old school idealist that goes in on that. So, for example, you know, he was co-founder of Ethereum, and when there was a security flaw called that, I think it was with the DAO,
That's right.
the
That's
DAO
right.
project,
That's right.
and so they forked Ethereum in order to correct the problem because so many people lost money, and he was leading Ethereum Classic, which didn't want to do the fork because they felt it was counter to the immutability of the blockchain. Like, you know, I mean, I know it sucks that that people lost money, but you can't change the blockchain. And so that's sort of the mentality that they've held on with. And Ethereum Classic is under the IOHK umbrella now, I believe, and Cardano is there, and they do a lot of research papers. So it was just really interesting to see, you know, and to talk with someone who's definitely more ideals driven than just a standard entrepreneur.
Yeah, I completely agree, and I think our listeners are in for a treat.
So without further ado, here's the interview. Have a great week, Neil.
This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Welcome to Analysis in Chains. I'm Nathan Williams. Joining me today is the legendary Charles Hoskinson. Charles was the co-founder of Ethereum back in the day, and he is now the CEO of IOHK, which runs Ethereum Classic, Cardano, and a number of other projects. It's an absolute pleasure to have you on the show. Thank you for joining me, Charles.
Thank you for having me on, Nathan.
So, I've always been interested in IOHK, specifically because one of your team members, Agelos Kayas, was one of our first interviewees. And I've sort of followed your work since the beginning because it seems to be very ideals driven. You know, there have been a lot of projects that have come up that have been interesting, and some of them have been profit driven. But, you know, when we look at something like Ethereum Classic, I see that it was born out of the desire to stick to some fundamental ideas, and I wonder if you could tell us a little bit about that process.
About Ethereum Classic or about the ideals of IOHK?
Well, tell us about the ideals of IOHK first of all.
Okay, yeah. So IOHK is kind of a very unusual company. We're both a research company and an engineering company, and actually to a certain extent even a design company. And at our core, what we do is we start from first principles, and we ask very simple questions about the nature of the science of our space. So, for example, we say, well, what is privacy? Or what makes a good consensus algorithm for a cryptocurrency? Or what is decentralization? What does that really mean? And then we actually write peer-reviewed research papers. Now, these are just a bunch of pretty prose sitting on a LaTeX document that we've put into a GitHub repo. They're actually papers written by scientists for scientists. So they're filled with lots of math and proofs and rigorous arguments, and then we submit them for peer review at major venues like Crypto and CCS and Eurocrypt, venues that if you get papers into them consistently, that's what gets you tenure at a place like Harvard or Cornell or UIUC or Oxford or something like that. So that's one side of the company, the research side. And since we formed that side of the company, we've written more than 40 papers, and about half of our portfolio has gone through peer review at reasonable venues. And the other half was either we're submitting them to different venues, or they were technical papers not meant for peer review. Then the other side of the company is an engineering company, and there we build cryptocurrencies and enterprise ledgers. And the point of that side is basically to say, okay, we kind of know what the design space can look like, the trade-off profiles for all these different cryptocurrencies, all these different designs, these different protocols. So how can we put them together to solve a particular problem? So that particular problem can be, we would like to give people a platform that promotes privacy for association and expression and also commerce. Or that could be that we want to solve the deplatforming problem with social media, where conservatives mostly, but both sides of the political spectrum are starting to be deplatformed from Twitter and from Facebook and from YouTube, and some people think that that's antithetical to a free and open society. Or we could solve the current problem we're trying to solve with Cardano, which is the issue of the unbanked. There are over 3 billion people that live with a bad financial system, and what we're trying to do is to try to find a way to apply cryptocurrency technology to somewhat solve that. The remittance side of it, the financial product side of it, the free and stable fair market side of it, the microcredit, microinsurance, and the identity side of these things. So at our core, though, we are a very principled company. So everything we do is open source. Everything we do is patent free. People are free to fork or take our outputs, and if they find a better use for them than we have, all the more power to them. In fact, several projects have already taken our papers. One of our flagship papers, Ouroboros, actually I think has been cited over 200 times, and it's been used in many different contexts. So, it's a very unusual company. On the enterprise contracting side, we do enterprise DLTs, so we're kind of like an IBM in that respect. But then on the cryptocurrency side, we're kind of like a consensus in that respect. And then on the research side, we're kind of like a DARPA or a Microsoft Research in that respect. And then we kind of have this philosophical bend, almost like a political campaign behind everything we do, where we believe in a decentralized, bottom-up led world that enables free association, expression, and commerce. So it's something that's been kind of an experiment. We started the company in 2015, and we've grown from just a few people to almost 200. We operate in 16 countries, and we're actually revenue driven. We've never taken external investment.
Now, I want to talk a little bit about the sort of this driver of decentralization, because it's a topic that was at the beginning of the entire blockchain revolution, but I'm starting to think that in many circles, the concept is becoming lost. And I've spoken to a number of people who are in the industry about, how decentralized can the future be? Or is the future of blockchain going to be taken over by larger corporates who just want to use it to get maybe another 10% benefit or efficiency gain on their bottom line? Is there enough of a drive for decentralization that it can really be mainstream?
Well, decentralization is a very expensive proposition, and decentralization for the sake of decentralization is not something consumers really want to embrace because there's a non-trivial cost to that. And you end up usually getting a slower and worse user experience than you would from a centralized solution. For example, if you're thinking of a payment system, there really is nothing faster than having a central server that's closely located next to you, that processes all your transactions, handles recovery, can reverse transactions. So generally speaking, people don't cry for decentralization unless there are serious and significant issues that would be exacerbated by centralization. So really, it's not necessarily a Western world phenomena. And if you're thinking about large companies operating in pristine economies with rule of law, people say, well, I don't really need monetary competition, or I don't really need a new property registration or business registration system. But what happens when you look at countries like Syria, for example, where everything's just a mess? There's been civil war for quite some time. There's millions of refugees running around the world. How are they going to put all of that back together? People are going to come back and say, oh, I own this plot of land. And somebody else is going to say, no, I own it. I've been living on it for the last 3 years in a war zone. It's mine now. And they say, okay, let's go take a look at the property ledger. They say, oh, so sorry, it was burnt by ISIS. Or how do you handle election? How do you handle basic markets? Also, how do you take your wealth with you if you're diaspora and you're running around the entire world? Like, where do you go? And there are millions of people from Sudan, Syria, and other places that are displaced. And they literally right now just have shirts on their back. Throughout the course of human history, when you get displaced, you lose everything. And this is the first time in human history where you can take your identity, your property, your money, your value with you. And you potentially can, even if your host jurisdiction, let's say Syria, doesn't agree to that, probably European Union will, and other people will, and you can use that to be a financial citizen. So it's really about context at the end of the day. It's about, well, who are we actually talking about, and what services are we dealing with? Usually decentralization comes about when there is no natural way for people to fully trust each other. If you give one actor too much control, then that actor will inevitably abuse that power to hurt society. So, as a thought experiment, imagine one utility that was controlled by a private company for your entire country. And let's say you pissed off the CEO of that company. And let's say he controls all the utilities, the ISP, the electric company, the water company. What would stop that person from basically firing you as a customer? Private business, they're in control of that whole setup, and so you get shut out. And you say, well, gosh, that would be terrible. I wouldn't have water, electricity, or internet. This is a human rights crisis. Well, this is exactly where we're at with ISPs and social media platforms right now. If you look at search networks like Google or social media networks like Facebook, they usually control more than 50% of all markets related to their domain. So if you get deplatformed or kicked off or can't run ads, for example, there really isn't an option B that's viable, or even if there is one, it's at a substantially reduced quality for you as an economic agent. So then people would say, well, maybe it makes a lot of sense for us to decentralize this type of infrastructure. And instead of having a middleman of necessity run this thing, we actually can put this into a decentralized network. Now, the user experience won't necessarily be as good. You won't have updates as quickly. You have governance problems of, well, how do you upgrade the system and who decides that? You have maintenance problems of, how do you get the incentives right to cover the cost of repairing the system, upgrading the system, and onboarding new users and marketing it. So it's not necessarily the most optimal situation, but then you look at it always in terms of the other option, which is just handing the keys to the Ferrari to Mark Zuckerberg or to Larry Page or to another one of these actors, and hoping the heck that they don't be evil and they're good agents. So that's how we tend to look at decentralization. And there's some very natural research questions that kind of come out of this. First, how decentralized can you even make a system before it loses cohesion? And just impossible to coordinate, and it's impossible for the system to operate properly. And then it's a question of, okay, you kind of know where the boundaries are. You can always centralize, and how far can you take the decentralization? Well, where is the optimal amount of decentralization for a system to be functional? For example, you could propose a curated decentralized system where it's very decentralized in terms of its users, and it does seem to follow a decentralized logic, but it's actually curated by a central company. For example, there's been a lot of discussions about running smart contracts or doing credential management or running a blockchain. Distribution, every CPU, whether you have a MacBook Pro or regular everyday laptop or a Surface device, has SGX cores built into it.
Charles, I'm sorry, I have to interrupt you right here. You hit the mute button, and we lost about 10 seconds of your...
I'm sorry, my computer went to power saving mode, and
understood.
I clicked it.
Let's just back up.
Let me restart with Intel SGX.
I actually forgot where we were when it.
That's okay. You can take a look at it. So go. You can.
Let's just leave a
5-second
blank, and then we'll start there.
Okay. It's entirely possible to build a system that is decentralized in terms of the user base, but curated by a central entity. So this is what makes these topics so interesting and intricate. So, for example, Intel SGX is incredibly well distributed. It has billions of devices floating around. If you have MacBook Pro, if you have a Surface device, a regular everyday laptop built in the last few years, you have SGX cores built into your Intel chip. So millions to billions of people have access to this, and you could run a cryptocurrency with it, an Oracle system with it. You could run a consensus algorithm with it. You could do a lot of things that are the bread and butter of the cryptocurrency space. You can even use it as a smart contract processing facility. But yet only one company actually controls what goes into that device, and that's Intel. So this is where it gets interesting. Decentralization doesn't just necessarily mean you have a lot of people following the protocol, or you have a lot of users, and these users are all around the world. It also is a careful analysis of who's in control, why are they in control, can they ever be fired, the market dynamics, the incentives. Bitcoin, for example, is technically a decentralized system, but less than 10 actors control more than 51% of the hash power of Bitcoin. So the heart of Bitcoin, the consensus algorithm, the thing that makes it go and approves all the transactions, 10 large-scale mining pools basically run that heart. And you really can't compete with them because they have access to subsidized power, proprietary business knowledge, and patented hardware. So while it is an open system, I can build stuff on it. People consider it to be decentralized. It has no issuer. It has no operator. There is a small federation of actors that are functionally keeping the network running, and they have a monopoly, and you really can't compete with them unless you want to invest hundreds of millions to billions of dollars. So it's an interesting question of what is decentralization? How far can we take it? And what's optimal for solving?
And even if you manage to get a fairly decentralized system, like a very decentralized system, you have the issue of a knowledge imbalance. So you can end up having the system controlled by a centralized actor just because they're much more effective at communicating and convincing everybody that their way is the best, because the more decentralized you are, the less the fewer experts you have.
That's the whole type of personality issue, right? Where the beneficent, highly charismatic leader shows up and convinces a lot of people to go and do something that actually may be against the core principles of the system. A great example would be just looking at Donald Trump and his presidential decree to build the wall using emergency funds. Ordinarily, this is a very, very anti-conservative position. The conservative position has always been that the president is not a king and does not have the power to unilaterally overrule Congress and reappropriate funds that Congress can only spend. But suddenly, because it's their guy, it's totally okay to violate over 100 plus years of conservative principles and do something that any Democrat president, or frankly, even perhaps George Bush, would have been excoriated for. So, charismatic leaders who built a cult of personality can actually have a dramatic impact on these systems and push them in directions that they were never designed or intended to behave in, and potentially change their character so much that the system stops behaving as a decentralized system altogether.
It's interesting. How should blockchain and those of us in the community take that into consideration when designing our systems?
So you really have to look at it in a couple of different dimensions. So one dimension is the dimension of support, maintenance, and basically the technical side of the system. So who's writing the protocols? Who's improving the protocols? Who's writing all the wallets, the clients, the software that you're physically using? That constituency has an enormous amount of power over the direction. And is that a monoculture where, like with Bitcoin, it's just one group of developers and they're mostly homogeneous in the way they think? Or is it a heterodoxy where you're actually multiple groups who compete with each other and don't necessarily even like each other? Like, for example, with Ethereum, the Ethereum Foundation, consensus, and parity tech all don't necessarily get along all the time. And they've had some legendary fights in the past, but they are building Ethereum clients. And so if one pushes too far in one direction, another one might push in the other direction as a counterbalance. So it's not a monoculture. So that's one dimension. Second dimension, you have to look at the nuts and bolts of how the system operates. So basically, how is information stored? How is network data moved? And how is that heart beating, that consensus algorithm running that actually makes the system evolve from one state to the next state? And who's in control of that? So this is where you'll see terms like proof of work and proof of stake and Byzantine fault tolerant and stellar consensus protocol and all of these things. Every one of these protocols has trade-offs. So some of them are very fast, but they're very brittle, meaning that they only have a few actors and they assume that every actor is behaving correctly. And if the actors don't behave correctly, then it dramatically impacts performance, or in some cases breaks the entire system. And other ones are slow, but incredibly resilient, where they can have a huge amount of tolerance against a lot of people hammering the system and trying to cause harm and chicanery. And then some of them have lots of actors who can participate, hundreds of thousands. Other ones, they tend towards centralization. So those mechanisms of how data is moved in the system, how it's stored, so how heavy is your blockchain? So, right now, Ethereum blockchain's multiple terabytes, Bitcoin blockchain's moving in that direction. The bigger, fatter that gets, the fewer and fewer actors who actually have a full node. And eventually gets to a point where it gets so big, only two can have it, the NSA or Google. You just have to pick which one you want it from. And so that is a huge centralizer. And then network traffic as well. If you have to have a fiber optic internet connection with a gigabit of download and upload capacity, grandma's not going to be able to keep up to date with that network. So she's going to have to trust somebody to basically keep her going. So, these three factors are also the other side of decentralization. And they'll tell you a lot about the character of the system. Also, it tells you a lot about what you can do with the system. Now, Bitcoin's a completely open system. Every node is equal. They can all remit the same information. They relay the same blocks and same transactions. But that's not necessarily true for all blockchain designs. Like Hyperledger Fabric, for example, allows you to establish roles for different people. And this is really important for things like supply chains or other use cases, like perhaps health records, where you want to restrict access based upon role and policy. So the hospital can see something, or the doc can see something, but the ship delivering the crates at the dock or the patient at the hospital can't see something. It's restricted, but by the design of the system. But yet you'd still like to achieve the same properties that a blockchain has, which are immutability, timestamping, and auditability. Those are generally the three things that you look for when you're talking about a blockchain system. So those characteristics tell you a lot. Do you have homogeneity or heterogeneity? Do you have a consensus algorithm that is brittle and tends towards a small group of actors, or do you have a very decentralized open system Can everybody access the same thing? How are you storing the blockchain? And then also the social factors behind the maintenance and repair of the system, the updating of the system, and where the money comes from. There's this thing called the golden rule.
Makes the rules.
He who has the gold makes the rules. Yeah. And so if all the money for the core developers is only coming from one or two entities, functionally those one or two entities are making the decisions about what the core developer is going to do. A great example would be that F# is a Microsoft project. It's technically open source, but the F# Foundation gets most of its money from Microsoft. So I don't imagine there's going to be a scenario where the members of the F# Foundation say, boy, let's go play with Google and Apple and go just start listening to them and screw Microsoft.
Maybe not.
That's probably not going to happen anytime soon, right? So it's an open source project. I can participate, you can participate, but at the end of the day, it's Microsoft's project. And it's the same for Google with Go and Google with Dart, these other things. So you have to really follow the money as well. And where does the money come from? Did it come from an ICO? Is it coming from rich benefactors? Is it coming from government sponsorship? Is it coming from a treasury system? So that's another component to the decentralization system, because it kind of tells you who the hidden masters are.
It really does seem that that's going to be the challenge of the future, is identifying who's funding a project or who's involved in the project, which is sort of, on the one hand, the epitome of KYC and knowing who you're investing in or whose tokens you're buying, and on the other hand, sort of counter to the ideal of the anonymous, decentralized blockchain that anyone can participate in.
Right. Well, it doesn't necessarily just because you're pro blockchain doesn't necessarily mean that you want to hide your identity. I mean, Satoshi did this for very sensible reasons, because the environment that he created Bitcoin in was very litigious. And people who had created alternative currencies had gone to jail, or payment systems had gone to jail, like the Liberty Dollar people and the e-gold people and so forth. So if those are only your data points, then you're going to say perhaps I should hide my identity. That's probably a no-brainer. But nowadays, I mean, the liability for building, working on, and participating in a cryptocurrency is quite low, and in many cases, it's a huge career booster. If you're known to be core developer of a cryptocurrency of reasonable size, it's really going to help you get a job. It's going to help you get ahead in life. So, just because some people choose to remain anonymous doesn't necessarily mean that everybody's going to want to, or it's wise to have a system where everybody remains anonymous. I'm sorry, I would not trust a health record management system built by some anonymous hackers on the internet.
Really?
I could read the code and hopefully make sure everything's okay. But what if it's a really complicated system with a million lines of code and dozens of really intricate modules that are referencing each other? I mean, what's the probability that there's some backdoor or some issue there, and then suddenly all my health records can at any time, or your records at any time, be extracted by an unknown third party? So what do I have to do? I have to go pay somebody to audit that. Would you trust an anonymous auditor? No. You'd probably want to go to Kadelsky or some well-known brand name. Well, wait, where is the anonymity then? I mean, at the end of the day, the technology and the science is going to get too complicated for any one person to verify if these systems work correctly. So we only can get to where we need to go by basically having checks and balances and trusted third parties coming in that we trust due to their reputation and the cost of lying, to basically tell us that things are okay. This is one of the reasons why we use peer review for the science. I'm a mathematician by training, but I'm not a cryptographer. And if my scientists produce a really intricate, like they recently did with Sonic's zero knowledge proof paper, I can read the paper. I know what the symbols mean. I could spend weeks and kind of dissect it and get it to a point where I have a comfortable understanding of what they're saying and what the paper's about. But I don't have 10 years of experience in cryptography, so I'm not in a position where I can say that there's no flaws or no mistakes or no issues in this paper. As a mathematician, as CEO of a research company, if I'm having trouble reading the research or fully grokking its correctness, then what chance does a non-domain expert, everyday person have to know if the science is right? Which, by the way, they're betting their privacy, their money, their property on. That's why peer review is so incredibly important, because it gives everybody, myself included, a check and balance to make sure that we didn't miss anything And this is the same process that scientists have been using for 400 years to give us the planes, trains, electricity, and automobiles that we've come to know and love. So you know, it's a process, and I don't think the goal is anonymity, and we live in this hacker utopia where your next door neighbor could be like the world's greatest programmer and nobody knows. That's a very small minority of a subculture. It's more of a situation of saying open systems, and people stake their reputations and analyzing these systems, parsing these systems, and making sure that these systems are reasonable. And then over time, the longer they've been around, the more peer review that they've had, the greater degree of trust we have in these systems. And inevitably, we start putting our money and our property and our privacy into these systems because we trust them. PGP is a great example of that. It's been around since 1991. Took quite a long time to get any modicum of adoption. The same for most cryptographic algorithms. We have elliptic curve crypto came out in the 1980s. RSA came out in the 1970s, which is the bedrock for the certificate system on the internet. So, you know, why is your e-commerce secure? It's because of these algorithms. Why do we think these algorithms are secure? Because they've been around for 30 to 40 years and no one's broken them. And a lot of people have tried, including state actors. So we have a lot of confidence that these things are safe and secure. And I think that's the process we should follow instead of saying, let's try to find a way to make everybody
what's your view
anonymous.
on the future of the industry? Do you think that it's going to be driven or should be driven by corporates and funding, or do you think that the scientist and the scientific approach is really going to rise up and dominate the industry, or is it going to be more of the rogue entrepreneurs out of high school coming up and disrupting everything?
Well, this industry has a superpower that no other industries really had in the history of startups at the non-sovereign level. We can print our own money. And, you know, I say that, you know, with a little bit of a smile on my face, but the reality is that we actually can't do that. You know, we created Ethereum, we created Bitcoin, you know, created Cardano, all these other cryptocurrencies, and people started buying them, trading them, and suddenly they're worth millions to billions to tens to hundreds of billions of dollars. So if you could print your own money, then you can use that money any way you see fit, and that money doesn't necessarily have to be attached to a standard Silicon Valley VC return on investment. It could be spent, for example, 100% of it to do open source research as if it was a government grant or something like that. So given that the industry has this superpower, it has used this superpower, and you know, it's created hundreds of billions of dollars of paper wealth, and people have shuffled it around, over $5.6 billion in ICOs in 2017 alone, for example. And a lot of that money is going towards software engineering, for open source software, and for academic research. It's people are writing papers. And a lot of that's going for product development and deploying these products into market. And these products, by the way, carry licenses like Apache and GPL and MIT, which means basically anything that anybody else does, I can use, and anything I do, they can use. So that's a very different kind of economy. We've never really seen this before. And it's basically being subsidized by people who are moving from the legacy economy into this new crypto economy. It's hard to know where the limits are. In the 1990s, we didn't really know where the internet was going to go. We knew it was going to be big, but we didn't know if it was going to be fax machine big or if it was going to be automobile big or something like that. You know, like where's the line there? And we just figured out it surpassed the automobile. It was this big. It was, you know, just enormous. So as a consequence, you know, we're still trying to figure out those boundaries, and those boundaries will basically allow us to arrive at a steady state of funding and commerce. And then my conjecture is that over time, as the legacy financial system begins to fail and fall apart, more and more people will move into the crypto system, if anything, as a monetary hedge against their country becoming Venezuela. I mean, if you look at the health of a lot of these big countries like the United States, on the outside, we look great. We have a very dynamic, magical economy. But then on the inside, we have some substantial problems. You know, more than $23 trillion in debt. If you go to U.S. debt clock, you can see how high it is. And what happens when the interest rates start going up on that? Then at some point, we'll spend more money servicing our debt than we get in income from tax revenue. And I'm sorry, you can only raise taxes to 90% and have a wealth tax and go and start stealing homes for so long before, you know, you just run out of functional money. Same for Japan. It's same for a lot of the Western European economies. Their debt to GDP is terrible, and their monetary policy is not so good. So a lot of cases, these governments are just simply kicking the can down the road. And every time we have a collapse, the collapse is 10 times larger than the prior collapse. If you look at the long-term capital collapse in 1998 and contrast that with the 2008 crisis, I mean, it's like day and night in terms of the sale. And long-term capital was a lot larger than the S&L crisis. Shifter is a lot larger than the 87 crisis. And, you just keep winding the clock back. So it stands to reason the next major economic collapse, whenever that does come, will be Great Depression in scale. And then people are going to take a step back and say, boy, this monetary policy that we've been following, which consolidates large financial institutions and makes them larger and larger every time a collapse happens, no one seems to be accountable, politicians don't seem to be able to do anything, and every time it collapses, not only do we lose our jobs, but our homes become worthless and our investments become worthless. Boy, this is not working for us. Let's go do something else. And at that point, it's an invitation to change the world monetary system, the world financial system, to something a bit more fair for everybody. And I think that's when crypto's real time will come. So all we're doing right now is just building fans and adherents and building core technology and demonstrating that technology is safe and secure. It's a new model. It's going to take decades for that to work its way through. But as we enter into the 21st century, at some point, the legacy system is going to have a collapse. And at that point, I think we'll have an inflection point. And the vast majority of people will move into some cryptocurrency-like asset and start decoupling the nation state from the money. Because the nation can no longer be trusted.
To be honest, that seems like a good hope for the future. And I think it's a good point for us to leave on. Now, I just want to ask you, you have a summit coming up in Miami. Is that correct?
Yeah, that's right. It's actually it's like the Beijing Olympics for my company. It's April 17th to 18th. My entire company is going to be there. We got some musical guests. Steve Miller Band is playing. CCR is playing. We got Stephen Wolfram coming in.
Jeez, I want to go
down. Fan of Cellular Autonoma and Mathematica. It's going to be a really good event. Highly recommend it. So IOHK Summit.io.
Well, that sounds amazing. Best of luck with it. Thank you so much, Charles, for coming on the show. It's always a pleasure to get this level of insight from your perspective on the industry, and all the best going forward with IOHK, Cardano, Ethereum Classic, and all of the other projects that you have under your purview.
Thank you for having me on.
Thank you.